inviting me. So another week, another emergency summit in Europe. These have become a recurring theme for actually the last 2 years now, since the crisis broke out. People might remember in the dim distance past of October 2009 when a new Greek government was elected, the government of PASOK. Papandreou was the Prime Minister at the time, opened the books and realised that the previous government, with the connivance, of course, of Goldman Sachs, had been cooking the figures for Greek debt, and the situation was substantially worse than anybody had really noticed. Just on Goldman Sachs, they then, of course, immediately signed up to advise the new government in Greece on how best to deal with the crisis that they themselves had helped precipitate. This is how the whole thing works, rather, when you're Goldman Sachs. So that's the crisis, that's where it starts from. And really what we've seen over the last 2 years is a kind of denial by the Troika, and how good of them to pick such a convincingly sinister name for themselves, the EU, the IMF and the European Central Bank. Process of denial by the Troika that Greece's debt is unpayable, and it is unpayable, and a kind of delusional belief that the way out of the crisis is to impose increasingly drastic austerity measures, increasingly harsh spending cuts on Greek public spending, on one side, and then on the other side do everything possible to avoid Greek creditors and creditors of Greece actually taking any kind of hit when Greece fails to pay. Those are the two aspects of the continual round of emergency meetings, of bailouts, further emergency meetings that have reached, I think, a culmination just in last week with the potential for €130 billion euro bailout, and at the same time some voluntary reductions in the value of Greek debt. So that's the part there. Now, the issue with this, right throughout those 2 years, right throughout the entire process of saying this is a Greek problem, we're going to manage it, we're going to deal with it, they just have to stick to the script of worsening austerity, of protecting the bondholders, we'll give you the bailouts, everything's going to stabilise. The most stupid part of all this is that austerity, in particular, is almost entirely counterproductive, even if you are very concerned about repaying the debt as soon as possible. That for very good, what used to be very well known macroeconomic reasons, known at least since the 1930s and the Great Depression, when the great liberal economist John Maynard Keynes started to formulate this, at least known since then, that if you cut public spending in a weak economy, you make that economy worse. You weaken the economy still further. And the mechanism is simple. If government cuts its spending, demand in the economy falls. If demand in the economy falls, firms sell less. If firms sell less, they lay off workers, they cut wages. If they lay off workers and cut wages, those workers in turn spend less, demand falls still further, firms sell less, lay off more workers. It sets up a vicious circle. It sets up a process of decline. And what it means is that your attempt to try and repay the debt that now exists, in fact, is entirely self-defeating, because what you're actually doing is damaging the economic activity which makes repaying the debt possible. So take Greece. At the end of 2009, the Greek debt to GDP ratio, the size of the national debt of Greece relative to the size of the economy, was 130%, so it's 30% bigger than everything Greece makes in a year. That's at the end of 2009. After 2 years of increasing austerity measures, of worsening austerity, with the intention of reducing the debt burden, that debt burden is now 160% of GDP. So in other words, on its own terms, the solutions offered by the Troika to the crisis in Greece and the crisis in the Eurozone are completely self-defeating, entirely self-defeating. And the same process, in a lesser scale, is happening in Portugal, in Spain and in Ireland. And of course, if you care to look at the GDP figures here, you'll notice something rather similar is happening to the UK, where a government, even without the tender mercies of the IMF bearing down on it, is carrying out an extensive austerity programme, where a similar process is also locking into place. The result of this, for Greece, is an absolute calamity. There's simply no other way to put it. The Greek economy has shrunk by about 20% over the last 4 years or so. By way of comparison, the only real comparisons that come to mind for developed capitalist economies in the last 100 years or so, it's up there with the decline of the US economy during the Great Depression. It's on that kind of scale. It is one of the worst declines in economic history over the last 200 years or so. That's the effect on the economy there. Unemployment, particularly for young Greeks, is approaching 50–60% of Greeks under the age of 25 now unemployed. And of course the social effects are absolutely cataclysmic. I mean, just to pick one figure, Greece used to have the lowest suicide rate in Europe. That suicide rate has now increased 40% over the last year. This is what happens when you try and impose austerity. This is what happens when you try and privilege repaying a debt that is fundamentally unpayable ahead of anything else you might want to do in the economy, and that's the kind of social cataclysm that starts to develop. Now, I think what we see with this bailout is some admission by the Troika that really this is the case, but that doesn't mean that they then reverse what they're doing. It doesn't mean that they say, okay, this didn't work, we'll do something else. They say, we'll give you more of the same, we'll generously concoct a voluntary reduction in the debt that is owing to various different people. That voluntary reduction, and I'll come back to this, is itself something of a concern, will generously allow you to wipe out some 50% of the debt that you basically can't pay, and then will allow you to stay inside the euro, in return for which you continue to trash your entire economy. You get rid of 150,000 public sector workers over the next year, 18 months or so. You reduce pensions already low to essentially a derisory pittance. You carry on doing all this because the key to this one for the Troika is that you keep paying your creditors, and to hell with what happens to your economy and society. And I think it's as simple and as brutal as that the Troika has essentially given up on actually having a Greek recovery and sustainability of debt. If you see their projections for how their bailout programme is going to work out, it's even on their optimistic scenario very, very unlikely to work. And of course their optimistic scenario is ludicrous, but their pessimistic scenario is also ludicrous, that Greece will return to growth within the next 2 years or so. This isn't going to happen. That basically it's so bad that you can only conclude they've given up. And this of course is partly the argument that's now taking place inside the German ruling party, the CDU, that on one side Angela Merkel thinks that we have to try and maintain the Greek economy in some state inside the euro, and on the other hand, Wolfgang Schäuble, the finance minister, thinks that time has come to simply cut everyone's losses and let Greece go hang. And he's been fairly blunt about this, and he's a fairly blunt man. He was the person who first suggested that the Greek parliamentary elections, where on current opinion polls some 45% of the population are planning to vote for anti-austerity parties, including the Communist Party, Syriza, and Democratic Left. They're planning to vote for parties opposed to austerity measures. It was Schäuble who first suggested that elections due in April should be suspended, and that call has now turned into, entirely in their own self-interest, a number of Greek MPs thinking, well, yes, this would be a good idea, because of course they fear for their own parliamentary careers, rather obviously at this point. There is a very good chance the election simply won't occur, given the situation that now exists inside Greece. But look at the pretty pass we've come to, where a German finance minister is decreeing whether or not Greeks are allowed to vote, are allowed to decide their own government. It's a very similar process to what happened when Papandreou suggested their previous package of so-called support just before Christmas should be open to a referendum, and of course bedlam ensues in the financial markets. He is quietly moved to one side, and we get someone who coincidentally used to work for Goldman Sachs appointed as Prime Minister. This is the disintegration of democracy inside the Eurozone, that when you push austerity like this, and it is self-defeating, and a society does start to collapse, you then say, we're not going to do the democracy over here. Same thing in Italy. Mario Monti, no one elected him. He just sort of pops up. Now, the Italians are glad to be rid of Berlusconi in the main, but he was elected, and this person, this banker, isn't elected. This is the crisis of democracy that also starts to appear in the middle of all this. So they've given up on Greece. I think they're going to let Greece go hang. That's the kind of deal there. The deal itself, I don't think, will work. there isn't really the slightest chance of it working, but that isn't entirely the objective. The objective is, I think by this point, to have enough cash stored away somewhere else in a series of bailout funds elsewhere, build up enough firewalls that any kind of default by Greece will be contained, it will turn into a Greek problem rather than a problem for the rest of Europe, and that once those firewalls are in place, Greece can be parked and everything carries on much as it is. Because to be clear about this, the debt is unpayable. One way or the other, Greece will have to default. The parallel case that we're looking at the moment, and the parallels are increasingly uncanny, is what happened to Argentina over the 1990s. That it had its own debt crisis. It did everything the IMF said, I mean to a fault. It did everything the IMF said, which was privatise anything that moves and cut anything that doesn't. And they did this, and then of course the debt crisis doesn't go away. They have a bond swap, somewhat like the deal that's being proposed for Greece now. It also didn't work, and eventually you end up with what they call a disorderly default, what I prefer to think of as a debtor-led default in late 2001, when they simply said they're not going to pay their debt. That is the situation that's now approaching in Greece. I don't think there's any chance that that will work. And there's one little detail in this, by the way. Some 25% of Greek debt is now held by hedge funds, now held by very, very speculative people, speculators, the really sort of nasty end of the financial market. 25% is now held by hedge funds. Now, these people don't greatly care about what happens to Greece, but they know full well that having bought the debt on the cheap, that when it defaults, they get the insurance on the debt. The insurance on the debt is something called a credit default swap, and they pays the full value of the debt. So they want a default to happen. That's 25% of the Greek debt is now held by people who very likely want a default to happen, just to throw in another potential for cataclysm down the line. So how do we get here? There's a couple of things. The first one is that this is not a Greek crisis. This isn't in any sense the fault of Greece, not in any useful or immediately prominent sense the fault of Greece. For the last year or so, I think we've had a series of myths about Greece and its people. That they're lazy, that they're spendthrift, everybody spends all day kind of loafing around in the sun, you know, eating olives or whatever. These kind of lazy stereotypes that have been played out in the course of this. The facts are actually entirely contrary to that. Greeks work the longest hours in Europe. Out of the entire OECD group of developed countries, there's only Korea, who are hardly noted for their kind of slack ways. There's only Koreans who work on average longer hours in a year. They work 50% more hours per year than the supposedly hard-working Germans. So Greeks certainly aren't lazy. They're not spendthrift. The Greek government, over the last 10 years, spent less than the EU average on public services. So this myth, the problem we're looking at is something Greece has done, and then this inflicts itself on the rest of Europe, I think is entirely wrong. What we're actually looking at is a problem in Europe that is inflicting itself with particular ferocity on Greece. And the particular issue there, I think, gets us back into the structure of the euro itself, the way that for the last 10 years, immense imbalances have been allowed to build up. On one side, Germany and Northern Europe exporting in colossal amounts, exploiting the fact that once you're inside the euro, the exchange rates can't move, so you can just run up a massive surplus, exporting in colossal amounts to Southern Europe, who see German goods as comparatively cheap, who then run a massive deficit on their own balance of trade. A massive surplus in the north, particularly in Germany, and a massive deficit on the south. This deficit then financed by European banks, who take the surplus generated in the north and pass it down to Greece in the form of debt. Greece and the other peripheral European countries, Ireland, Spain, Italy to some extent, and Portugal. That's the process that's built up over the last 10 years or so. And this imbalanced system then ran into the financial crisis of 2008. Key effects of the financial crisis are an increase in public debt everywhere because of the bailouts, and at the same time a widening of deficits, the amount of money the government is spending over what it takes in, a widening of deficits because of a very, very sharp recession. Very sharp recession breaks out, tax receipts go down everywhere, unemployment rises everywhere, government deficits increase everywhere. Take those two things, put them into the imbalanced situation that exists inside the euro, and then you have the crisis. And you have a crisis that manifests itself with particular ferocity in Greece. That's why we're in the situation we're in now. It is not due to excessive public spending or everyone getting carried away, when the good times were there. Absolutely not. It is due to a flawed single currency, then running into a flawed financial system that had a major crisis, and that in turn leads to a steady disintegration of a European economy over there. That is how we got into this stage. What that implies is that almost everything that has been suggested as a series of solutions to the crisis are completely wrong. But if we want an alternative to this, the complete reverse of what the Troika is doing, the complete reverse of existing policy inside Europe would be the way to start getting out of it. I think for Greece it's clear that default and therefore exit from the euro would be a starting point. But I think in general, for all of us in a European economy, including in the UK, whose own financial system, whilst not directly exposed to Greece, is of course very much exposed to the French and German banks who hold massive amounts of Greek debt and will therefore be affected by any default taking place elsewhere in Europe. But the same situation prevails, that if you have austerity, you trash your own economy, there is no prospect for recovery whilst you're implementing austerity on the scale that is being suggested, and therefore the opposite of what is being done should take place. The government in a sharp recession should be increasing their spending. This is the basic lesson of the 1930s, and that ideally, as Romain mentioned, they should be spending that money wisely. So a Green New Deal, the creation of sustainable jobs, the implementation of renewable resources, the construction of low-carbon infrastructure throughout Europe. These are all things that could and ought to be happening, but they simply aren't going to happen whilst we have the situation that prevails with the EU, the IMF and the European Central Bank overseeing what looks like increasingly a catastrophic situation, certainly for Greece and potentially for the rest of us. The way that that reverse starts to happen, I think, comes through the sort of movements and the opposition to austerity that is now starting to develop in Europe. Most obviously in Greece, where demonstrations, strikes, votes for anti-austerity parties are all an important part of building that opposition. But I think we can learn something from that, which is that we need the same kind of mass movements here. We need something that can talk about how we got into this crisis, that prevents a case against essentially the dishonest version of reality that this government and others provide. That actually we shouldn't be cutting spending. The social effects are, as we all know, disastrous, but the economic effects also are pretty disastrous. That's the case we need to present, and that's why I'd like to think that coalition resistance is part of building that movement. Thank you.